Welcome back to another video, guys. Now, I really do have to say this. Staying active in front of your charts every minute and hour of the day doesn't guarantee you making profits. You have to understand the market is designed to beat you. As such, trading less increases your chances of winning. The fact remains you lose too much because you trade too much. In this video, I will be sharing my trade strategy using the trade I got in on volatility 10-1x index, banking a total of 1 to 4 risk to reward on this. And then, like the strategy entails, you basically have to focus on the higher time frame, the weekly, the daily, and the hourly time frames. Now you have to understand this, guys. Price moves where the higher time frame leads. On the volatility 10-1x index, from the daily time frame, all I did was identify a key level, and then I waited for price to come right into my already identified key level. Somewhere around 8760 psychological round number, I had identified a key level, which I like to call my area of interest. And now, guys, what I like to do is identify my areas of interest from, or rather using the weekly and the daily time frames alone. And then any time frame beyond the daily time frame, the hourly and beyond, I use for trade entry executions. So clearly, right at the level 8760 psychological round number was a key level, owing to the fact that what price had tested the level quite a number of times and then reacted off of the level. As you can see, we had the level being a support right here. We had the level being a support also here. And then third time, the level being a support. As you can see, right here, we had the level acted as a resistance. We had the level as a support right here. We had the level as a resistance here. And then at this point, we had the level as a resistance. Just here, the level acted as a resistance. And then eventually we had a break of the level. So you can see from me, this is a key level owing to the fact that what we have had to see quite a number of price touches and then reacted off of the level. So clearly the first thing I did was identify a daily key level, a daily area of interests, which I've showed you a very perfect example how I personally identify my areas of interests. You can see we have had this level tested 1, 2, 3, 4, 5, 6, 7 times, and then reaction from the level. And then we had this break of the level. And guys, previously the level was a resistance. And then we had a break of the level. A broken resistance becomes a new support. So as you can see, for every of the times we had price above the level acted as a support right here. And for every of the times we had price below the level acted as a resistance. So now we're above the level, safe to say, upon the retest of the level, we would expect the level to act as a resistance. Now that's the very first thing I noticed. Price had broken past a key level and then retested the key level. In this case, expected to act as a support. And then, of course, also, you would notice very well volatility 10-1S index is very clearly in an uptrend. Clearly with price pointing us higher highs and higher lows. And then we add this rally that broke the key level to the upside, pointing us the higher high, being the most recent higher high. So we have the market structure to the upside. And then we have price very clearly above a key level as we've identified from the daily time frame right here. And then at the retest of the key level, because we are having to see price above the level is expected to act as a support. And then looking for a buy trade opportunity would be a higher probability setup. As you can see, we would be trading in line with the market direction. The market is in an uptrend. And then we're only looking for buying opportunities at the retest of our identified key level. Also, to further solidify the confluence at this level, if I introduce my Fibonacci retracement from previous swing low to the most recent swing high, this being the most recent swing high, and then you have noticed also we had the retest coming right into the Fibonacci 61.8 golden reversal level. Now, anywhere within the 50 and 61.8 Fibonacci level is where I want to look out for price continuation setups in line with the market direction. And since we have the market in an uptrend, we had this nice impulse move to the upside and then a sell or retracement right into the 61.8 Fibonacci golden level. I definitely was looking to get in on potential buy opportunities from the level only if the price action gives confirmation at the retest of the level. So as you can see, we have the daily time frame in an uptrend. We clearly have seen a price at broke above a daily key level and then retesting the daily key level around psychological number 8760. And then, of course, introducing the Fibonacci retracement from previous swing low to the most recent swing high. The key level, the daily key level, where we're having to see price retrace into is perfectly aligning with the 61.8 Fibonacci reversal level. And at this level, I would be looking for price continuation in line with the market structure. I pretty much was anticipating for price to come into the negative 61.8 as my take profit level. So just a few pips shy of that level was where I had my take profit set for the buy trade. I got right in on this at 87.60. It's in 960 rather. So like I said, I was anticipating for price to come right into the negative 61.8 as my overall take profits, even though I had gotten out of this trade a little bit earlier. Now, how did I get my entry for longs? Once you've clearly identified your area of interest using the higher time frames, guys, I cannot stress this enough. Preferably, I like to use the weekly and the daily time frames to identify my area of interest. These are just key levels, just like I've explained a few minutes ago. And then once you've identified your areas of interest from the higher time frames, in this case, I'd use the daily time frame. You then want to move a time frame lower for your trade entry execution. A time frame lower. This brings me down to the 4-hourly time frame from where I had my buy entry on the volatility 10-1S index trade right here. Now moving down to the lower time frame. In this case, I'd move just a time frame lower, the 4-hourly time frame. What then do you want to look out for? At the retest of your already identified higher time frame areas of interest, moving down to the lower time frames, you want to look out for things like break of structure, reversal chart patterns, divergence, candlestick confirmations, EMA retests, rejections. Now, this is just a few of the things you want to look out for moving down to the lower time frame. And clearly, as you can see from the 4-hourly time frame right here, Upon price retesting my identified daily area of interest, I also add right at the level the 50 exponential moving average present at the level. And then just to throw a little light on the explanation right here, you can see when we're above the exponential moving average, at the retest of the exponential moving average, this acted as a support. And then we're having to see what price come back into our identified daily area of interest with the exponential moving average present right at the level. And then we had a nice rejection off of the level. For some other reasons, I did not get to take my entry just off this rejection right here. But then, as soon as we had a nice impulse of the level, a nice price rally from the level, we had quickly come back into the level, presenting us a nice 4-hourly double bottoms. So with this being the first, and then second retest of the level, giving a perfect example of a double bottom. And then what did I get to notice? You can see now, guys, also at the retest of this identified area of interest, you want to pay attention, like I said, to the price actions at the level. You can see from the 4-hourly time frame, we're at 1 to 3. Very nice bearish momentum candlestick upon the retest of this level. And as soon as we got right into the level, we noticed a shift in momentum. Now, the next 4-hourly candlestick that printed at the retest of the level was not as bearish as the last 3 4-hourly candlesticks. And this also closed very nicely as a rejection candlestick. And then again, we had the next candlestick closing as a rejection candlestick also, and a bit more momentum than the previous 4-hourly candlestick. And then, of course, the third 4-hourly candlestick at the level closed also as a rejection. And then not just as a rejection candlestick, also as a momentum candlestick. As you can see, this is a combination of both the rejection and then the bullish engulfing the previous 4-hour candlestick closes right here. Now, this gives you clues, guys. If price wanted to go beyond this level, it would have done that already. You can see the very bearish momentum candlestick closes. And then as soon as we got into our area of interest, an area where we're looking to get in on longs, safe to say the level was a buy zone, was a bias zone. As soon as we got right into the level, then we started seeing candlesticks that were giving us clues that indeed the momentum is shifting from selling to buying. And then, of course, also, every one of these rejections from the 50 exponential moving average with the momentum candlestick closing right back above the 50 exponential moving average. Now, we have ourselves a clear case of a reversal chart pattern right here, being the double top pattern. And then also we have ourselves a retest of the EMA, and then with the rejections from the EMA. And then also we have ourselves a candlestick confirmation for longs. We have the rejection and then the momentum candlestick close from the very exact level we had identified as a buy level, a level where we're looking for potential buying opportunity. And then if you would want to go a step further just to stack up the confluence, then of course you'd notice very clearly the 4-hourly time frame is also in an uptrend. You can see we have price printing us higher highs and higher lows. With this being, and then we had ourselves the most recent swing high right here. And then we had more like 100% retracement of the previous swing low. Now you can see we have the market structure also very clearly in our favor. The daily time frame in an uptrend, and then moving down to the 4-hourly time frame where we have our buy entry confirmation from also in an uptrend. And then it was only at this momentum candlestick close I had my confirmation to go long on this with my stop loss just below the low of the rejection candlesticks. And then I had a very tight stop loss on this because I was kind of certain for a fact that price would not go beyond this level. Like I explained previously, if it wanted to do that, it would have done so already. I had lots of convincing reasons why I was quite certain that at the close of the momentum candlestick, the 4-hourly momentum candlestick, closing right back above the 50 exponential moving average, price was going to continue with the price rally. And that was the case right here, as you can see. As soon as I had my entry, the next thing I had to do was set my take profit and then wait for price to play just as I expected it to do. And then this took 2 days to get right into my take profit level, giving me the easiest 1 to 4 risk to reward trade. Now, guys, it doesn't get any simpler than this. You have to understand, like I said, price moves where the higher time frame leads. You can use this strategy to scout for higher probability trade setups. Taking just 1 or 2 trades weekly with a 1 to 4 risk to reward like this right here is an easy 16% profit for the month. Now, say you took some loss and it goes down to 12% profit for the month. This is still very decent a profit, risking anywhere between 1 to 2% of your equity on each trade you get into. Thanks, guys, for staying till the end. Leave me your thoughts about this in the comment section and hit the subscribe button for more content like this. See you in the next video, guys.